Hey guys, welcome back to the channel. Today I'm going to be covering specific price levels where I'll be buying and accumulating Bitcoin for a longer term investment and providing my overall strategy and reason behind these levels. If you enjoyed the content, please do consider leaving a like and subscribing. So I'm going to be taking a DCA approach and strategy for accumulating Bitcoin. If you're unfamiliar with the term DCA, basically it's a strategy where you average in at different price levels and divide up your buys periodically. So for example, what that might look like is starting your strategy around $20,000 and on every subsequent drop $2,000 lower, you could accumulate more. So first accumulating at 20, 18, 16, and so on. And in general, that's just the gist of the DCA approach. I think it's a great way at hedging some of crypto's extreme volatility and preparing for various scenarios in the market. It's something I've already started doing here with my first DCA buy around $19,000 on the first test below the prior cycle's all-time high, around $19,800. So the rationale behind starting my DCA strategy at $19,000 is because I generally think that anywhere under 20K is going to be looked back upon as an incredible accumulation spot, and I did want to get some exposure to Bitcoin if we're starting to bounce off the prior cycle's all-time high, around $19,800 as support. Now, part of the DCA strategy is dividing up the total amount you want to allocate to an asset at each price level. And for me, what that's going to look like is dividing up my buys so that the lower we are going, the greater the percentage I'm accumulating of my overall desired allocation. So in a few moments here, after I cover the specific levels I'm looking at, I will be covering a scenario in which hypothetically you wanted to accumulate one total Bitcoin, what that looks like in terms of how much Bitcoin is being accumulated at each price level. The next level down from $19,000 that I'll be adding to my Bitcoin stack is going to be the $17,000 area. Now, this is an area of interest for a number of reasons. First, we can go back to the prior cycle and we can see how this was the region in which we had this rejection point, this lower high being formed on the weekly. So what we did was we had this all-time high being formed, we capitulated about 45%, and then we rebounded up back down to this $17,000 area, and then from there we formed a lower high in this structure, further continuing into the bear market. We can also see how this corresponds if I toggle the 300-week simple moving average. That would be in confluence with the 300-week SMA, and basically the only other time in Bitcoin's history in which we've retested the 300 SMA was in March of 2020 on this capitulation where we bounced sharply from this wick off the 300-week moving average. So in the event that we're starting to go back down, this is the second area I'm going to be accumulating and further contributing to that DCA strategy. Now, if we start to lose that level and we continue into the bear market further down from there, the next level I'm looking at here is this $14,000 area. So what I'm going to do here is switch over from the weekly chart to the quarterly chart, and I think this has a lot of good and valuable information. So on the quarterly chart here, the $14,000 level is a huge support and resistance area. If we go back to the prior cycle's quarterly close, it was at around $13,888. Now, this flipped into resistance in this quarter here, second quarter of 2019, where we rejected off of this for this mini peak. So if we're starting to come back down below $17,000, below $19,000, this is the next area that I am going to be adding onto my Bitcoin stack. Now, the quarterly chart does do a good job at cleaning up all the noise and really helping to isolate the key levels, but I think this rejection here back in the second quarter of 2019 is best illustrated on the weekly. So we can see this rejection here with this massive wick all the way up to the $14,000 level as a huge resistance point. And then finally, if all of those levels are breached, if we go lower than that, my final level of accumulation is going to be at the $12,000 area. Now, the $12,000 area has historically been a significant level of resistance during the last cycle. Now, we can see that we had resistance being held in 2019 with the wicks going to the $14,000 region, but the candles being only capped up at this $12,000 area. We also had resistance here in the summer of 2020 with these candles consolidating below this with the final capitulation about 20% below with this last drop before going to new all-time highs. So those are the four key levels in which I'm going to be DCAing into Bitcoin. Now, I don't exactly expect all of these levels to be filled, And really, what I'm doing here is I'm preparing for all possible scenarios. I think there is a reasonable chance that we retest $17,000. There is a chance that we go to $14,000. And then if in the extreme case we go to $12,000, I am prepared. So back to the strategy, hypothetically, if you wanted to accumulate one Bitcoin, one approach you could take is, say, accumulating 0.1 Bitcoin at 19,000, 0.2 Bitcoin at 17,000, 0.3 Bitcoin at 14,000, and then 0.4 Bitcoin at $12,000. If all levels are filled, you have your greatest buys at the lowest level around $12,000. And if not, if you have the bottom towards the $15,000 range, at least you have accumulated and gotten exposure to Bitcoin at some low levels. The good thing about this DCA strategy is that you can customize it to your personal risk appetite. For example, you can divide each level into equal shares and accumulate 25% of your desired allocation at each price point. Or if you disagree with my areas of interest and think Bitcoin can retest 10K, then you can scale down your buys with the largest potential allocation being at 10,000. Now, whatever approach you take, it is important to stick to your approach. The good thing about developing a strategy today is that you have a plan for when we do hit those lower levels if we are to drop from here. Having a plan and sticking to your strategy can remove the emotional aspect. A lot of times the emotional investor ends up retracting their bids and moving the goalposts to lower targets. Eventually the emotions are taking over and saying, well, okay, maybe I'll buy another 15% lower from here. And then when Bitcoin drops another 15%, you move the goalposts and you say, well, another 15% from here and I can accumulate. And this process just continues and continues until there isn't another 15% drop. And at that point, the market plays with your emotions and it doesn't allow you to get back in. Because what it does is it bounces 20% and you say, well, I'm not going to pay a 20% premium, so I'll just wait for it to dip back down to that same level. And then it never happens and you're forced to enter later on, and you're entering not under your own conditions, but the market's conditions. And that's what the plan helps prevent. It prevents your emotions from distracting you from the opportunity that Bitcoin is down 70, 80, or even 85% from its all-time high. So those are the levels I'm adding to my Bitcoin stack leading into the next cycle. If the low is already in, I will scale up higher from here with further confirmation, but I do have the assurance that I still DCA'd in at $19,000 and have a great entry. So I am prepared for each scenario that the crypto market can bring, and I have a plan for the bear market. So I hope you guys enjoyed my strategy overview. Again, this isn't financial advice. This is just simply what I am going to be doing, my approach to the markets, and my overall strategy for how I'm going to navigate the bear market. If you enjoyed the content, please do leave a like and subscribe. And as always, I will see you in the next one.